Skyworks is rebounding a little bit today.
It doesn't
You see
count.
it here. Dreadful week. Worst, in fact, since '08, December of '08. Worst day since October of '87 is what it did yesterday. I told our viewers that you were traveling yesterday, which is why you couldn't join us, but now you're cornered.
That's okay.
So what do you do with this name now?
Well, coincidentally, I was cornered yesterday. I was squished into a foursquare on an Acela. It was terrible. I would have rather been calling in. Okay, so what you do. What we're doing is we're waiting it out a little bit because we think that the share price move yesterday was a bit dramatic. So they announced earnings and they said there's going to be, they said there's going to be a 20 to 25% basically real estate reduction in the chips that they put on the next generation iPhone. That's a lot, but it's also, I don't mean to make this sound like an excuse, it's just the iPhone. They also do Android, they also do cars, they sell chips all over the place for other things. So you take that, and it's 25% of one thing, shares traded down 25% also. So then I said, okay, what are earnings going to really come down by? Goldman actually reduced their earnings estimates by 30%. That seems too much. And so if earnings really were to come down by 30% and the share price was down about that much, that would make sense. But for one product, and these are like very, very long lead time chips that go into things, I think it's overdone. So we're getting out, right? The growth, it was in our disciplined growth strategy, has $700 million of free cash flow still. That will give them room to buy back shares. That supports the stock. It just seems overdone here. So we're just kind of like taking a breath, letting the shares recover a little bit, hopefully more than the 1 3/4% that they're at now.
Did I just hear you wrong? You said you're getting out?
Yeah, but not today. Not today.
Okay,
it's overdone. Sorry, we're getting out because it doesn't make sense for the strategy.
Well, you're making the case that it's overdone, but you're saying you're getting out. I mean,
totally. But not today.
What's the advice for the viewers, though?
But not today is the answer because this is just too much, right? And I don't think that the analysts like the one Goldman cut of 30% to earnings. That seems like too much. So we'll probably give it a few weeks, see where the dust settles, kind of let some rationality.
Well, you just
come
like to try and make a little bit of money back before you sell it. That's what this sounds like.
That is correct because I really think this share price here is overdone. So it can't work for our growth strategy going forward. I actually asked the question, does it now work for the equity income strategy because it now has a 4.2% yield? It depends on what investors want. Like if your starting point is today and you think, okay, the shares are overdone and you're getting a 4.2% yield, if your starting point is today, it could make an interesting investment. But for our growth strategy, where you need real earnings growth ahead, right, plus free cash flow growth ahead, then it's not there. So it's going to work for some. And you know what? It's just like Ackman and Gerstner. Like our trash may be someone else's treasure, and we're hoping to get a little bit of that treasure before we fully exit.